Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. The initial data showed that U.S. economy grew by 2.3% annualized in Q4 2024, the slowest growth in 3 quarters. Personal consumption remained the main driver of growth, increasing by 4.2%, the highest since Q1 2023. Employment data for January will be released this week, with non-farm payrolls projected to add only 170,000 jobs, a decline from the 256,000 added in December 24. The unemployment rate is expected to remain at 4.1%. Trump's newly announced tariffs on Mexico, Canada, and China risk igniting a trade war, potentially raising consumer prices and disrupting supply chains. In response, Canada and Mexico have announced retaliatory tariffs, while China plans to file a WTO complaint. Economists and business groups warn that these tariffs will increase costs for American households and industries, particularly in automotive, energy, and agriculture. China Zone. The Caixin Manufacturing PMI for January will be released and is expected to remain in the expansion phase, similar to December's reading of 50.5. Indonesia Zone. Foreign direct investment in Q4 grew 33.3%, marking the fastest growth since Q4 2022. Several key economic data releases are expected this week. Manufacturing PMI for January will be released, projected to remain in the expansion phase at 51.6. January inflation is predicted to rise 1.88% year-on-year and 0.32% month-on-month. GDP growth rate for Q4 is expected to slow to 4.95% year-on-year. Foreign exchange reserves in January are projected to increase as the dollar index has weakened. Market view. The Jakarta Composite Index JCI decreased by 0.79% week-on-week, closing at 7,109.19. Despite a less favorable global outlook this week, particularly due to the potential trade war following Trump's tariff increases on products from Mexico, Canada, and China, domestic economic data releases could provide support. Several key domestic data points will be released this week, including January inflation, Q4 GDP, and the manufacturing PMI, which may help keep the JCI in positive territory. Foreign investors recorded a net sale of 1.04 trillion Indonesian rupiah over the past week, bringing the year-to-date outflow to 4 trillion Indonesian rupiah. The 3 weakest performing sectors were basic materials, infrastructure, and properties and real estate, which declined by -2.88%, -2.60%, and -1.77% respectively on a weekly basis. On January 31, 2025, the yield on the 5-year benchmark government bond FR0104 rose to 6.83%. Meanwhile, the yield on the 10-year benchmark FR0103 remained flat at 6.99%. Similarly, the yield on the 15-year benchmark FR0106 was unchanged at 7.19%, while the yield on the 20-year benchmark FR0107 increased to 7.21%. The yield on the 10-year Indon bond Indon 34 declined to 5.38%, while the 10-year U.S. Treasury yield fell to 4.54% compared to their levels on January 24, 2025, which were 5.46% and 4.62% respectively. Indonesia's risk premium as reflected by the 5-year CDS increased to 74.74 basis points. Meanwhile, the rupiah depreciated by minus 0.29% week on week, closing at 16,314 Indonesian rupiah. As of January 30th, 2025, foreign ownership in the government bond market stood at 878.76 trillion Indonesian rupiah, 14.42% of the total outstanding, up from 875.96 trillion Indonesian rupiah, 14.37% of the total outstanding on January 24th, 2025. The Fed is expected to cut interest rates twice, totaling 50 basis points in 2025, lowering the benchmark interest rate by a total of 100 basis points year to date. The U.S. economy remains on track for a soft landing, with growth projected at 2.5% year-on-year in 2024 and 2.1% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2025, which is anticipated to positively impact Indonesia's economic growth. The bond market is likely to respond positively initially, driven by improving macroeconomic conditions, followed by a strong performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.